The following segment is sponsored by Green Platinum, trading in the U.S. as WGPLF and on the TSX as WG. Located in the Yukon Territory, Canada, the Green project has the potential to become one of the world's largest and lowest-cost open-pit producers of platinum group metals and nickel. Find them on the web at wellgreenplatinum.com.
David Morgan is an expert on silver, gold, and precious metals investments. He's a world-renowned lecturer appearing on CNBC and the Fox Business Channel. He's an author, having penned Get the Skinny on Silver Investing. And Mr. Morgan is a regular contributor and friend of the Ellis Martin Report.
David, welcome back to the program.
Oh, it's been a while. It's great to be back. Thanks.
You sent me an article for a discussion on this particular segment, which I find is fascinating. It's on the BeaumontEnterprise.com website. Texas Governor Abbott signs a law creating Texas depository for state gold, and according to this article, there's talk of repatriation with regard to Texas gold from the Federal Reserve in New York back to Texas. Would you care to comment on this? And I think you would.
Yes, I would. Well, first of all, if we go back a few steps, we will note that, and I forget the year, especially at my age, the years just roll by, but regardless, Texas basically started buying gold for some of their pension funds. They were one of the leaders in getting into gold at what I consider the right time or early on, and they were taking gold physical, and this was something that they were leading in, and that was something that actually I noted and put out there in the public domain, suggesting that other pension funds, hedge funds, which have done it, but mostly pension funds, take a look at this and use gold as part of their portfolio. And I'm going to drift off and digress slightly here. Forgive me, but there's a report done by BMG Group, Bullion Management Group of Canada, Toronto, Nick Barishev and company, that paid for a study by Ibbotson and Associates. And they did a portfolio analysis. And this is totally objective. These guys have nothing to do with being biased one way or the other. And they found that in current circumstances that the best portfolio performance would be by having 15% precious metals allocation in physical metal. This is not in mining stocks. This is in physical form. And I made big use of that study and tried several times to get into the professional investment community, meaning the paid financial planners. I mean, some financial planners, you actually go to them and you pay them a fee and they work on your behalf. And other financial planners, you don't pay a fee, but they get a commission on what they sell you or tell you to put in your portfolio. And almost none of them put you into gold, which is really unfortunate because it's really a requirement as far as I'm concerned, really at all times, but particularly in the financial uncertainty realm that we have right now. And I'm going to digress even further here, Ellis. I'm sorry, but I need to. I think it's just laying on my heart rather heavily. You know, there's a lot of discussion about gold being an inflation hedge or deflation hedge. And it's really, I agree with Doug Casey, it's a crisis hedge. And really, Martin Armstrong, I think, you know, whatever you think of Martin Armstrong, what he says is it's really, gold is a bet against government. In other words, government failures are when gold really go. And I would say that's probably the fundamental biggest push for gold, is that when governments fail, that means their monetary systems fail, their ability to create debt and have it monetized fails, and then there's this run to gold. So I've gone down the rabbit hole fairly deeply, but gold is very important. Texas has recognized that very early. Then they've recognized the fact that they don't have it in their hands. They're trusting this quasi-banking system, the Federal Reserve, that said that they had it, and then we get news that no, actually the Federal Reserve Bank in New York doesn't have the gold, because last month gold was reported to be vaulted at HSBC in New York. So it looks like they don't even know where the gold is, and I'm trying to make light of this, but it's hardly light. It's rather concerning, to put it in polite terms, because when you own it, you should be able to get it whenever you want it, type of thing. And of course, we know from various times over the last few years that that's not necessarily the case.
In your opinion, is the Texas Republic hedging against the United States government and the Federal Reserve?
I wouldn't go that far, although I wouldn't rule it out. I wouldn't say no. What I would say is that they're being very conservative, as they should be. When it comes to gold, as Mike Maloney and many others state, if you can't touch it, you don't own it. And so they've got a certificate that says they have this much gold vaulted at this such and such bank, and here are the serial numbers on the bars. That's probably what they have as a minimum. But they're saying, you know what, we have the right, we own it, and we're going to store it. We don't need your vaulting. We don't need to pay a storage fee anymore. Send it over. We've got our own vault. So give it to us, which they have every right to do. And so to me, this is the beginning of a bank run. Well, I wouldn't say the very beginning, but it's a continuation of a bank run, meaning a run on gold or a run to gold. Because a lot of people know that there's a lot more paper gold and paper silver that's in existence than there is physical reality. I mean, the paper paradigm does not meet the physical reality. And myself and many others have said, and I've said it basically from the early 2000s, that there would be a day at some point where those two don't match, and because the mismatch is taking place and it becomes public knowledge, that would be the point where the credence in the paper markets would deteriorate, and could deteriorate rapidly or basically overnight. Now, if that's a scenario, there could be other scenarios. But we've seen it happen in gold, and really nothing's happened. In fact, gold is still at a very undervalued level right now. I mean, we had this Ambro, I think it was called, bank, this Dutch bank, and people had physical gold, and they had the certs, and they said, I want my physical gold. Nope. You can't have physical gold. You have to settle in cash. And then we have the German thing, which is a big debate, because if you talk to like Jeff Christian, he said, well, Deutsche Bank really doesn't want the gold, and they said they wanted it over 7 years. And then you hear other commentators say, no, the people want it sooner than that, and Deutsche Bank is just playing the game of buddy-buddy to the banking cartel. So anyway, there's confusion around that issue. And then now you have Texas saying, give us our gold. And then you had Venezuela, and Venezuela got their gold, and they got it. And now it looks like they're going to make a swap deal again with the banking institutions. But there has been this subtle, kind of under the radar, unless you're a gold bug and you visit shows like yours, but general public has no idea that kind of under the radar, there are nation states, pension funds, states that are going in and asking for physical gold. In some cases, they're not receiving physical gold. They're getting paper promises instead. One of the leaders here was Utah. Utah passed legislation that allowed transactions to take place peer-to-peer, person to person or store to person or business to business with gold and silver. And I was actually there when the governor of Utah signed that legislation into law. And the problem, and I'll put problem in quotation marks, was that even though it's legal, it's law, it's very cumbersome, because going into Walmart with some silver coins and saying, I want to buy this, is just, and the law states it must be reciprocal. In other words, both parties agree. Well, most merchants aren't going to agree to take a silver coin. So that's where the idea to come up with a debit card that's backed by precious metals, I actually had that idea. It's not just mine. I'm sure others have thought of it, but I tried to implement it without success. And then Dale Olmsted, who you've interviewed, did it here in Spokane. So it's transparent to the merchant, and they're just running a plastic debit card like they have every day. And what they don't know is that the transaction is actually paid for in precious metals, if that's what the client desires. And this debit card that I'm referring to, you have the option of filling it with both cash and metal. And in my own personal case, I have the metal sitting there because it's at a higher paper price than the current price. But I have a cash side like any debit card. So when I use my debit card, I just draw down the cash at the same rate I would with any debit card. So it functions just like any debit card out there in the paper paradigm. But I have the option, when silver is at a higher level, to spend my silver in, to shop with it, buy with it, whatever, spend it. And going one step further, it's one of the biggest questions I've received over the years is, well, I really trust you, David, or believe you, or think I should have some precious metals, but what do I do with it? How do I get rid of it? I don't know what, It's a big concern for a lot of people. Well, in this particular case, you basically spend it into circulation. In other words, let's say you had a large account and you had a dorm payment for a quarter of college, which yours truly has been doing here for quite some time. You could, silver you bought, for an example, at 15 is now at 20. I know it's at 16 right now, but let's say, we're talking in the past or whatever, and you could just spend it. But I digress. But the point is that there has to be a functionality that makes sense in today's modern electronic world. And the only way I know of that works is this debit card system that's backed by precious metals, that's transparent to the merchant. So coming back on point, I think the more important point is really there's a subtle run on gold. And Texas is in there now. And it's going to be very interesting to watch this very closely to see what happens. How soon does Texas receive its gold, which I think it will, but what amount of time, and what do the banks do before? Do they just pack it up and ship it through like Brinks or Garda or one of these trucking firms that specializes in valuables, precious metals, and truck it in there? Or do they make some big hoopla about this, that, and the other thing that has to be, studied or whatever? Who knows what they'll come up with. But I'm very curious about this, because this is the leaders starting to leave the ship. This is as a metaphor. These are the early awake people, and now it's a state. And there's been banks, as I said earlier, that are starting to say, you know what, I know the gold is supposed to be there, but I want to have it. Send it to me. And once that starts, there'll be more. It starts with 1, then it's 2, then it's 5, then it's 10, then it's 25, and then it's 50. And all of a sudden, there's a run on gold. And that run on gold is something that they can't afford. Same thing could happen in the silver market. Silver's a much smaller market. The silver is much more dependent, really, on the average person. But we've had record highs in the silver market on the coin side last year. And we, the Morgan Report, are going to be doing a special for our members. And I think we're going to invite some of the public for free as well. A special report on the 2 silver studies that just came out, and just go through those studies. Top level, but in-depth enough level to get all the meat out of it, definitely, and served up to you in a manner that's really easy to understand, because these studies, in my opinion, aren't written very clearly, but we ferret out everything and put it in a manner that's very direct and very kind of in your face and explain everything. And we're going to do that in a written report for all of our paid members. And then we're going to go into a video format and kind of not necessarily read it to them, but show them some of the documentation behind what we're talking about, and then our projections for what the true price of silver is currently and where we see the silver market going over the next few years. So that will be upcoming. I'll probably ask you to put a link on your website or whatever to kind of get people that are interested in the topic. So I'm way off in left field. You ought to bring me back, but this is important. In fact, this is very important, and we have to watch closely to see what the next step is by the banks. The ball has been served very hard across the net to the bank, saying, we've got a gold depository, send us our gold. Now it's your turn. Are you going to serve it back, or are you going to let the ball fly by?
I don't know if I want to bring you back from left field. This is a fascinating subject, and I think for the first time in a long time, and I've been covering this sector for a long time, I see a clear path to fiat currency disappearing, at least as a currency, as we head down the road. I mean, if you want to look down the road 15, 20, 50 years, when we're not really carrying cash anymore at all in any capacity, how are you going to back up your currency? And it would seem like the only way we could back it up is the way we would do it 100 years ago or 150 years ago in the Old West, and that's with gold. So are we going to see potentially the current banking system fail, or are we going to see it migrate into banks really being depositories of gold?
Or something else. I mean, you've got really 3 scenarios. I mean, you've got a collapse of the bond market, which is default. Then you have a default on the currency, which is basically an inflation, or most referred to as a hyperinflation. Or you have some kind of repudiation of debt or compromise / reset. A reset would be you're going to get 50 cents on the dollar on your bonds and love it or leave it. That's the way it's going to be. And there's multiple scenarios within those 3 frameworks. I mean, there could be a bail-in where your deposits aren't yours, which they're not legally, and the bank, rather than bail out from the government, which is based on the people anyway, is just directly taken out of the people's bank accounts. So there's lots that is going on. So I think there will be what we are seeing already, which is competing currencies. You've got Bitcoin, you've got this Bit Gold that's just coming out that's taking over gold money, as I understand it. You have this debit card that I just described. There's more than one of those. There's one that Peter Schiff has that I don't think is available for U.S. citizens, if I understand it correctly. But you're starting to see competition in this realm, and you will continue to see that. So my take at this point, and this is observation of fact rather than conjecture, and we both should look down and speculate, but I'm just offering the opportunity to broaden up it a little broader, Ellis, and that is that I think we're entering the era of competition to banks. In fact, there's a gentleman that I spoke with from Australia recently on a private consultation basis that's setting up a gold, silver debit card. And the intermediary that had the conversation with me initially said that he didn't really want to get involved unless silver was in the equation, and it is. So that's where I think we're going. I think that a lot of smart people are fed up with the system, pun intended, and they're looking for alternatives. And I would rather trust my money with this XYZ private entity and back it by gold and silver and have them hold it for me, or part of it. And certainly I'm not recommending, you store your gold anywhere. I mean, I'm a big proponent, if you don't touch it, you don't own it. But larger depositors that have the ability to store it and spend it, I mean, it has to be that way, because you could either spend it directly, obviously, which is difficult, or you could have it in a depository. And that's what I've recommended to people that are interested, is you put a partial sum, something like you do with a checking account. I mean, you don't have your total net worth in your checking account, or very few people do. You have what you need to go about your daily life. And the same thing here. in a gold or silver depository, same situation. So I think I explained that, but I think that's the main trend, Ellis. It's not going to be the government entities that go to a gold-backed situation. I think it'll be outside the government realm into the private realm that will be competing with government money. That's the way I see it.
Speaking of trends, I was at a meeting just a couple of days ago with a mining company here in Los Angeles, and the mining company is a Canadian company, but they're here looking for investors, and they met with fund managers and what have you here locally, and there was scuttlebutt, there was conversation about hedge funds in the Midwest, and those are some of the most conservative people and conservative bankers, I mean private bankers, that I've ever run across, and they are moving into gold stocks at this time in this market, and they've never been in gold stocks before. Let's discuss that phenomenon.
Absolutely. Well, the GDXJ, or the little penny stocks, mostly the junior mining companies, they're up about 18% from the end of March, and these companies are well under the radar of almost everybody. Even those that are in the resource sector have just pretty much thrown in the towel and given up. The HUI is up. When you're a member of the Morgan Report at the premium level, you get to look over my shoulder, and I flip up my computer screen and I show you charts. This is all technical work, and even if you're not technically oriented at all, the obvious is in a picture. So a picture tells 1,000 words, so it's very easy to make the point. But I made the point recently that, look, this is a very big deal because no one's talking about it, that the mining sector is actually showing strength. Now, it could be for a couple of reasons. One, it could be short covering, meaning that these guys, these entities, these bankers, these bullion banks, these hedge funds, etc., sovereign wealth funds, what have you, have been shorting the market for so long and been winning for so long that they decide to cover their shorts. That's buying pressure, and that would rise the price. And the other is, as you say, that very conservative people see the trend, and the trend is that this can't go on forever, and gold is a hedge against financial uncertainty, and again, backing up Martin Armstrong, it's against government failure. So they're moving into gold. It's probably both, I would say. It's some people that are smart enough that, they're not looking for the last penny or the last drop, or, there's been a lot of talk about there's one more huge drop coming in the gold and silver market. I am saying there's not, but I've been wrong before. But a lot of people think there's one more drop coming. It could be, but trend currently is pretty strong that is not the case. The metals stocks lead the physical in a bull market, and we're still in a bull market as far as I'm concerned, even though it's been hammered hard for 4 years. The overall macro picture is still up. So I think it's very important for your listeners to know that these mining companies are actually doing better than anyone would expect at this point in time vis-a-vis the metals prices themselves. And that is the smartest money. And when you get conservative money, like you say, from the Midwest, which is probably the most conservative, salt-of-the-earth type, no-nonsense physical economy people that exist, at least in my experience, and they're there, and they're worried, and they're moving in the sector before most people are happy to do so again, it speaks volumes, really.
Stay tuned. There's more to come in just a moment.
The Ellis Martin Report is sponsored by Wellgreen Platinum. Wellgreen Platinum is a Canadian mining exploration and development company focused on the active advancement of its 100% owned Wellgreen PGM and nickel project toward production. A 2015 economic assessment shows the Wellgreen project, located in the Canadian Yukon, to be potentially the second largest PGM producer outside Southern Africa and Russia, with average annual production of over 200,000 ounces platinum, palladium, and gold, along with 128 billion pounds of nickel and copper from just 34% of the pit-constrained resource, making it possibly one of the largest in the world. Estimates show that once in production with assets near or at the surface, this low-cost producer may generate cash flow exceeding as much as $330 million per year. Situated along a major highway in a mining-friendly jurisdiction with an active market for PGMs and nickel, and with a strong management team, Wellgreen is certainly to be considered a candidate for your portfolio. Find them on the web at wellgreenplatinum.com.
We follow those that like to be followed. Follow them yourself at ellismartinreport.com.
You spoke of the macro picture, and I'm just going to pick a target there and saying, well, the price of gold really, compared to 2004, 2005, 2006, is up. Even at almost $1,200, it's a significant price compared to several years ago, but yet the gap between the price of gold and mining stocks is huge, especially with some of these producers out there that haven't stopped production, but their margins have slipped because the price of production has not fallen down. The drilling crews and the rigs and all that, there's still a demand for them. None of that's dissipated. So essentially, and that suppression may have gone on. There's other speculation that the suppression of gold was all about being able to buy gold cheaply. Some of these foreign governments like China and Russia, concerns in the Middle East, are just really, they've worked to make sure that they can buy gold cheap. Maybe we could narrow this down a little bit. That springboard suppression, that's got to have a jack-in-the-box effect at some point as attention comes back to gold, not as a trading commodity or gold stocks as a trading commodity, but as something you want to get into long term.
Yes. The best leverage by far is in the mining sector right now, and particularly in the precious metals, because as I've said many times, the precious metals are the top tier of all the commodities because gold and silver are money. Regardless of what the mainstream says or what some analyst says, the historical record from before the Bible onward is that that's what people have voted as money, regardless of the fact that cattle was once and salt was once and all this other stuff. Sure, that's a fact. But the truth is that nothing has supplanted gold and silver as money worldwide for the longest period of time. In other words, the vote is in, gold and silver reign. I don't care what anyone else says, that's a fact. So that's number one, that the best way to leverage that is through the mining sector. That doesn't discount the fact that I've always explained to everyone that you should have the physical metal first because it's outside the matrix. There's no counterparty risk when you own a gold and silver coin. It's not in the banking system. It's not in the brokerage system. It's not dependent upon anyone other than you and whoever you are going to transact with. So that doesn't change. But as far as getting the most bang for the buck, it's certainly in the mining sector.
Well, there's nothing else to really leverage, is there? We were talking about Texas in this broadcast and in a previous broadcast where energy is sort of deleveraging, or it has been at the moment. You know what's happening in the real estate market. Really, where else is there to go?
Well, I think the days of leverage are ending. That's the problem with the system, is it's an exponential function, and the ability of the average person to understand what an exponential function is waning. Most people don't really understand that, but they do understand what a hockey stick looks like, and they do understand that nothing grows to the moon. And so when you see any commodity, silver included, go into that kind of a parabolic uptrend, you know it can't last forever, and that's the debt bomb that we talk about in the Silver Manifesto. And that is something that people need to understand, and almost everyone listening to this channel do, but that's only maybe 1 or 2% of the population. There's this 98% that still think that the bond market's the best place to be, and the bonds are the safest place you can be. Well, that was the best trade you can make from 1980. I mean, the 30-year bond getting like 17% locked in, and then as interest rates go down, the value of the bond goes up. Are you kidding? What could be better than that, than a guaranteed government payment of 17% year over year for 30 years, and the price of your principal goes up and up and up and up and up? Are you kidding? But there are people that are in that position, and they're so locked into that paradigm they can't see it. And what you can see clearly now is that nothing grows to the moon, and that the ability of these governments to pay for those bonds are impossible. It's mathematically impossible. So again, the choices are, well, we'll give you your currency, but it'll be worthless or near worthless. We'll we'll reset it, or the bond market will crash and the value will be determined by the market once again, and that huge capital gain that you have in the bonds will not be nearly as large, or maybe it'll go negative. Or they could halt the markets. I mean, there's a lot of things that can happen. I mean, these people are desperate at this point in time, and it's my very studied view that they really don't know what to do. They think they have all these tools available. They think they can control everything and everyone. But if you know anything about chaos theory, that's an impossibility. Long-term capital management proved that beyond a shadow of a doubt. Go rent the movie $1 Trillion Bet and watch it again. You're going to get a foretaste of what's going to happen, not just when the Russians defaulted on their bonds, government failure, gold went up. Gold, you know, I like what Armstrong said. I mean, I know I've said it 3 times in the interview, but it's something that one of the guys that writes for Stratfor wrote a book. I forget the title of it. I want to give him credit. But, you know, I basically wrote a book saying, you know, things aren't that bad, that when things start going bad, the government comes in and rescues everybody. Look at General Motors, look at this, that, and the other thing. It always happens. It's going to happen again. Life is great. A few years down the road, everything's going to be wonderful. We're going to have more prosperity than ever. Everybody's going to be richer. Everybody's going to be well-fed, blah, 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 blah. I mean, just happy, happy, smiley, smiley face. And boy, I'd love to believe that. But I circled the basic premise. And its basic premise is that the government can come in and rescue everybody. Well, what he didn't say in the book, and I'll say loud and clear, is that governments fail. Governments fail. Let me say it again. Governments fail. Russia failed. Their ability to pay off their debt failed, and that was basically the end. So not that their wealth went away, it just was reorganized. Again, a reset. So this is what we're really facing, Ellis, and this is something that most people never even think of. I mean, they're so locked into the normalcy bias and the paradigm that the president has this kind of power and the Congress and whatever nation state they're in, that such and such, the authorities that rule over them can take care of things or maybe not take care of things, but they're under their power and their control, which they are to a certain extent. But what happens when that starts to break apart? Well, guess what? I mean, just take a good, hard, objective look. They are breaking apart. Look at the Arab Spring. That wasn't about banking. That was about food. That's pretty basic to the human experience. If you can't eat, you get pretty restless. So there's a lot going on that there's no one out there talking about in the mainstream. It's only shows like yours, Ellis, the people that you have on that will explain and really kind of laser focus at times. I know I speak in generalities in some instances and very focused in others to get the points across that the world you see that's painted by the mainstream is a total illusion. In fact, it's such an illusion you have to basically be delusional to understand it. Delusion means the inability to recognize facts and reality for what they are. And so if you can't recognize the truth or the actual system as it stands for what it really is, and you just believe this holographic image that's painted by the TV set, the reality when it does break through will be a very big shock, and that's going to happen to a great many of the masses.
So it may not be delusional to invest in owning these gold or silver-backed debit cards, and it certainly may not be delusional right now to take a look at some mining stocks. And you've done that with the Morgan Report, and you offer a portfolio of potential investments to subscribers of the Morgan Report. Let's wrap up with that.
Yeah, and I'll just add on to that. There's one that we're looking at that could be a real game changer in the small mining entities. It's a company that I know well. I know the principals, and we, meaning me and my team, are going to go down and visit the working model. It would be a speculation, but this is kind of a wheel onto the facility like a big RV, and it's a self-contained unit that can basically process gold or silver, precious metals, on demand, so to speak. So it would be really could be a game changer again for the small mining concerns. It's not going to change Newmont or RTZ or any of those, but these small guys that have fairly good quality, you have to have the real deal. You can't just have dirt. But if you've got good enough grade, you can roll this thing on, and they're going to have a business model that's pending. So the idea is, let me carefully choosing my words here, they're like a 50-50 split or something along those lines, where we will process it for you on site, and we will split the amount of gold, silver, whatever we get out of your facility. And this would be a way for the small companies to fund their operations again, because right now they can't get money. But if they've got gold, they've got silver, and they know it, and they sign a contract. So this is something I'm very excited about. Game changer. Yes, it is a game changer for the small company. I don't want to misstate this and get people excited. David said this, David said that. No matter how much I qualify it, someone's going to misinterpret it. But nonetheless, it's something that we want to see it before we write about it. And then if it works out reasonably well, and we'll film it, of course, because when you're a premium member of the Morgan Report, you basically go on these trips with us. I mean, we take a camera with us and we do a video, and you are like, wow. I mean, I don't know who else in the industry does that, especially at the price of $269 a year. I mean, most of the time, those type of services are in the $2,000 to $5,000 range.
I'm kind of excited after being involved in this interview. There's a lot to look forward to, and we could see perhaps a gold rush that we haven't seen in a very, very long time. And by that, I mean everyone pointing toward gold as an investment opportunity, the physical metal, the stocks, the silver as well, for a good reason, all of which we've discussed. David, thank you so much for joining us today in the program. It's always a pleasure to speak with you.
Yeah, it's a little different. It seems my interviews with you lately have been a little bit more in-depth, a little deeper. Sometimes I'm reluctant to do another interview type of thing because it seems like I'm repeating myself. But, you know, it depends on the interviewer sometimes on the right questions. There's so much to explore in the monetary world, and I feel that this was a worthwhile interview from from the aspect that there was new information for everybody too. Some of it was repeat, obviously you have to, but a lot of it was new, fresh, and perhaps meaningful to the public at large, which of course is something I'm concerned with. I do care about others and the way the world really works, and it works a lot better when we're open, honest, and sincere than the way things are operating currently with Big Brother at all.
I've been covering this sector for a long time. You and I have probably been on the air together almost 10 years, and I feel like we're just starting anew. It's exciting now. I can't wait for that excitement to play out in the market.
Well, thank you. It was a pleasure to be on the show again.
I've been speaking with the silver guru, David Morgan. His website is themorganreport.com. Listen to this segment again on the homepage of our website, ellismartinreport.com, or download the entire Ellis Martin Report on iTunes. The preceding segment is sponsored by Wellgreen Platinum, trading in the U.S. as WGPLF and on the TSX as WG. Located in the Yukon Territory, Canada, the Wellgreen project has the potential to become one of the world's largest and lowest cost open-pit producers of platinum group metals and nickel. Find them on the web at wellgreenplatinum.com.